I am back in Miami, and it feels fantastic to be back here in my old neighborhood. And today I'm walking down North Shore Drive here in Miami Beach, and it's like 77 degrees. Sun just started peeking out, and really couldn't be better. And it feels really great to be back home. And I'm glad I'm back home where the real estate madness is usually happening, right here in Miami, to talk about the real estate madness that was just introduced by President Trump, because he wants to have a 50-year mortgage, which is probably the worst idea regarding real estate that I have heard in a really long time, guys. And several of you who watch my channel actually wrote me an email to express the same sentiment about how this is just going to make the housing market even more jacked up than it already is. And I know this is going to get people fired up, but I'm just going to go ahead and say it. You know, the 50-year mortgage is one of the worst ideas to ever hit the housing market conversation. But at the same time, I'm not surprised, because many of you guys, as well as myself, predicted this would happen at some point, because already a couple of years ago, the FHA decided to start extending people's mortgages from 30-year mortgages to 40-year mortgages for people who could not afford it, and requested financial assistance, or they requested a loan modification. Certain FHA borrowers have been able to get their 30-year loans turned into 40-year loans in order to make it more affordable. And so the same idea is what's being used to present the 50-year mortgage. But I'm going to show you guys the math, the risk, and all the hidden consequences behind this on why it is such a bad idea. It's not just an opinion. Mathematically, it's a bad idea. But before we talk about the 50-year mortgage, let's cover a brief history of the 30-year mortgage and how we got to this point we're at right now in 2025. You know, the 30-year mortgage dates back to the 1940s. It was pretty much the government's way of jump-starting construction and giving families a chance to buy homes after World War II. And by the late 1950s, it became the go-to loan product that pretty much everyone used. And today, more than 90% of buyers choose a 30-year loan. Why did they do this? Well, because it is predictable and it's easy to qualify for. But here's the part that a lot of people forget or fail to recognize when going for these longer loan terms, is that every single type of mortgage, including a 30-year mortgage, is front-loaded with interest, meaning that the first 15 years you have that mortgage, you are paying more in interest than your actual principal payment, which means you're not reducing your loan balance by a whole lot for the first half of that loan term. And since the average homeowner, as of 2025, only keeps their property for about 12 years, most people barely make a dent in their loan before they sell the house and start the whole process over again. And in case you didn't know, there are other types of mortgages out there. There are also 15-year mortgages, and the 15-year mortgage can actually save you a significant amount of money in interest payments over the life of the loan. But why don't people choose it? Well, because the 15-year mortgage requires you to basically make way more income to buy and qualify for the same house. Here's an example. If you look at a $500,000 house at a 6% interest rate, which is pretty close to what we're at right now, the 30-year payment would be $2,400 a month, but the 15-year payment would be $3,300 a month, a whopping $900 a month more. And in order to qualify for that 15-year payment, you would need to earn around $10,000 a month instead of only $7,500 a month to get the 30-year mortgage. So people naturally choose the lower payment so they can qualify to buy more house, and they get more flexibility. And who can blame them, right? You know, if you can get a bigger and nicer house and a lower monthly payment, it's kind of a no-brainer for most people, and they just don't worry about the interest, especially since you can deduct a good chunk of that as a homeowner against your annual income off your tax return. So when people hear the term 50-year mortgage, they think immediately, well, great, if the 30-year mortgage made housing even more affordable back in the 40s, well, it's going to do the same thing right now in 2025. But that's actually not true, because when you go from a 30-year loan to a 50-year loan, it only increases affordability by, get this, 8%. That's it, 8%. Meanwhile, if you go from a 15-year mortgage to a 30-year mortgage, it increases affordability by 34%. So extending your loan an additional 20 years only gets you a tiny little bit extra of buying power, but an absolutely monstrous amount of additional interest you have to pay over the life of the loan. And I'm so glad we're back in Miami to see some of these crazy real estate deals that are being offered here. Take a look at this house here, guys. Here's a house that was purchased back in 2017 for $2.886 million, almost 2.9, already a crazy amount of money pre-pandemic. But then they listed it for sale in May of this year, so before I even left to go to California, for $6.75 million, and I've already cut the price over $650,000 since listing, and it's still sitting here available. Typical Miami listings that sit on the market for potentially years and don't move. I did see some listings over there in California like that, but this is pretty common over here. And I'm sure we're gonna run into a whole lot more of them as I keep making videos here. So let's get into the math of why the 50-year mortgage is a horrible idea, okay? The longer the loan term, the higher the interest rate you end up paying, because lenders are taking on more risk by giving you a longer loan term, because they're essentially tying up more capital than they need to in order to give you that loan. So there's an opportunity cost for these lenders, and naturally they're going to charge you for that. If you go for a 15-year loan right now, you could get a 5.3% rate. If you go for a 30-year loan, you could get a 6.1% rate. But if you were getting a 50-year mortgage, you could be looking at a 7% or more rate. So if you take a $500,000 loan at 30 years at 6%, that's $3,000 a month. If you take a 50-year mortgage at 7%, you're actually paying $8 more per month at $3,008 a month. So a 50-year mortgage could actually be more expensive and cost you more each month than the traditional 30-year mortgage right now. Who in the world is going to go for that? And how does anybody think that's a good idea? You know, when you see these crazy messages and ideas out there, it just gets people amped up, but they don't realize how stupid it actually is until you run the numbers. And even in a dream scenario where, let's say, the interest rate is actually the same, they're not going to charge more, they're not going to charge a premium for a 50-year over a 30-year mortgage, your payment only drops from $3,000 a month to about $2,632 a month. It's like a 10% discount for doubling the loan term. And so if you need a 10% discount off of your mortgage payment that badly, that's not really a mortgage issue that can be fixed. That is a housing affordability issue, which is something I continue to hammer on the channel. That's why this 50-year mortgage is a horrible idea, because mortgage rates or the loan terms that are currently being offered have never been the problem, but they're continually perpetuated as the enemy of housing affordability, but the math doesn't jive. And the worst part is, it's not even that there's not a huge savings off the monthly payment, but it's actually really bad for you as the home buyer when it comes to building equity, because the first decade of a 50-year mortgage is going to be pretty much purely interest. If you were to buy a $550,000 home with 10% down, and you have the house for about 12 years, which is what people typically do right now, you've only paid off about $32,000 off the principal. So if home values go down even just a little bit, you're instantly underwater. And if the market stays flat, you walk away with less than your actual down payment. You are going to come out negative when you sell the house. You're going to have to come to the closing table with money. You will literally lose money after owning the house for a decade. Think about that. Everybody believes, well, if I just hold on to the house for long enough, then I'm going to come out ahead financially, and that typically has always been true. But if we get an actual 50-year mortgage, that same rule is no longer going to apply. That's completely out the window, guys. That's done. And the typical rule of thumb with lenders is they typically like to give you that longer loan term because they're going to earn more in interest. But in this case, it doesn't even work out well for them either. And here's why. Because if the rates were to go down, then a homeowner can refinance. But if rates go up, the bank is stuck with a low yield loan for half of a century. And mortgage investors, people who buy the mortgage-backed securities, forget it. A 50-year mortgage blows that up completely. The risk is too high and the returns are too low, and nobody in the secondary market wants that exposure. So who is going to buy 50-year mortgages packaged up as a mortgage-backed security? Probably nobody. And let's not forget, something I covered a little over a week ago is that the average first-time home buyer today is now 40 years old. And if you were to buy a house with a 50-year mortgage, that means if you were to actually stay in your house, you would not pay it off until you're 90 years old. By the time that house is finally owned free and clear, your grandkids might be thinking about retirement. But if the current administration wants to improve housing affordability, this just isn't the way, and they should be looking at more sensible solutions. Like, for example, they could raise the capital gains exclusion to $1 million indexed to inflation. And if they were to do this, then that would essentially unlock so many new listings, because that's one of the main reasons a lot of people who have owned their homes for a long time do not want to sell today. Also, they could allow people to port their existing mortgage to their next home. So people with a 2 to 3% mortgage rate could start moving again. They could also increase the mortgage interest deduction for new loans, which would encourage more construction and better mobility. And these are the real solutions that could potentially help out with housing affordability. Anything that would cause more people to list their homes for sale and increase inventory even further, because there's this big myth that we have a housing shortage, guys. And somebody just made a comment about this the other day, like, Michael, why are all the news channels talking about there's still a housing shortage, but you say there isn't? Well, it's just simple math as well, guys. It's facts, okay? You look at the inventory levels, we are pretty much back to pre-pandemic levels of inventory. I think we're only 10% below where we were in 2019 on a nationwide average. And if there was a shortage of housing, then all of the homes that are on the market would be getting sold. But instead, the demand hasn't been this low in over 30 years, and people are not buying houses. And the main reason is because they are unaffordable. Yeah, sure, there's a lot of houses for sale, but many of them people cannot afford, which means sellers are either going to have to hang on to those homes indefinitely, or they're going to have to bring the prices back down to reality where people can afford. So let me just make something crystal clear. A 50-year mortgage doesn't make homes more affordable. It doesn't help the borrower. It doesn't help investors. And it definitely does not help the housing market. It's just a gimmick at best. And it's something that sounds good on social media, but collapses the moment you run the numbers. If this ever actually becomes a reality and mainstream, we're going to see people locked into loans that they can never escape from, and people are going to lose more money than ever when they start buying real estate. You're going to have no equity, you're going to have record amounts of debt, and you are going to die with a massive balance on your mortgage. And it seems like it's just been one bad idea after another this week when it comes to trying to fix the housing market, because Fannie Mae, they just announced that on starting November 16th, they are going to no longer require its minimum credit score for borrowers, which means your credit score is no longer a factor in getting a loan. And already it was at 620, which was the minimum credit score requirement, which is already kind of shaky. That's not really great if you're looking at FICO scores. So the fact that that's going to be eliminated is going to make it so that even more unqualified people can buy homes. So don't you see the common theme here? What they're trying to do is the same thing that happened right before the massive crash in 2008, is they're trying to make housing more accessible to people that can't really qualify to buy homes under the current system. The problem is all these ideas are really horrible and they're not going to work. It's just going to lead to more fallout in the housing market, which I guess could be good news in the long run, because the more people that end up losing their homes due to having problems with being able to afford them, then the more inventory that ultimately comes to the market. So it sucks that a lot of people are going to have to suffer and be victims of these scams, but in the end, it's going to help the housing market because it's just going to cause more inventory to come up once people realize they can't afford the house. So instead of using the 620 minimum credit score that they currently have, they're going to be using their desktop underwriter software. And this is going to determine if a borrower qualifies based on a number of risk factors from the borrower's credit report, along with non-credit risk factors from the loan application. Basically, they're saying that this change gives lenders more flexibility in the types of credit scores that can be considered. Yeah, so if your credit score is 550, then you might have a better chance at qualifying for a loan. You can already get an FHA loan if you have a 550 credit score. And look what's happening with that. FHA loans have the highest delinquency rate out of all the different loans. I think it's over 15% right now. So, I mean, obviously, I have no control over these things that are happening, right? All I can do is comment about them here on YouTube and give you guys my opinion based on what I saw back when 2008 happened, because I was a part of it right here in Miami, and it wasn't pretty. But it seems like they're just reintroducing a bunch of old ideas in new ways that are just going to collapse the market once again. And it's already collapsing right before our eyes right now. Imagine how bad things are going to get if all these things come to fruition. This minimum credit score thing being dropped is already going to happen for sure. The 50-year mortgage isn't confirmed yet, but if it does happen, start preparing for another 2008 style collapse. And really another data point we can use to back up that claim is that adjustable rate mortgages continue to gain popularity throughout all of this year in 2025. In fact, adjustable rate mortgages made up about 10% of all mortgage applications in September, which is the highest share in about 2 years and well above the post-2008 average of 6%. So people kind of learned their lesson after 2008 happened and stopped getting these adjustable rate mortgages, because that's how so many people lost their home. But everybody has forgotten about that now. 2008 was over 15 years ago now. And a lot of home buyers today were not around for that, or they couldn't afford a house back then and didn't really know what was happening with it. And they're all falling for the same mistakes again. And in case you don't know, the reason why adjustable rate mortgages are a bad idea is because they start with a lower payment because your interest rate is lower. And then once the rate adjusts, which is why it's called an adjustable rate mortgage, that increase in the monthly payment is what got people in trouble back in 2008. In fact, back in 2005, which helped build the bubble up, adjustable rate mortgages accounted for 35% of all mortgage applications. Obviously, that's quite a bit more than 10%, but the fact that it continues to climb is a worrying sign. But of course, people in the mortgage industry want to argue that adjustable rate mortgages today are significantly less risky than the ones we saw before 2008, and borrowers who qualify tend to have better credit profiles. Well, wait a minute. Didn't we just say that Fannie Mae is going to be dropping the credit score requirement to get a loan? So how does that even matter anymore? Right now in this environment, an adjustable rate mortgage can save you about $200 a month off your mortgage payment if you were to get a $400,000 loan. So it is somewhat of a savings, but I don't think that's a large enough savings to really have people take on the extra risk, guys, because once it does adjust, if you are making the bet that rates are going to come down by the time you want to refinance and get a new loan, if that doesn't happen or rates actually go up, you are going to see a significantly higher payment than you have right now. But because so many people are doing this right now, what this tells us is buyers are looking for any sort of edge on affordability that they can get, and they're taking bigger risks than ever in order to buy a home. Now, I will just say the only way that I would do this if it were me, right? Because this is how I think about things. Like if I were going to do something like this, what would be the motivation and why would I do it? So if I were doing this today, I would do it because I know for sure I'm going to sell that house before the 5 years is up, so I never have to worry about that loan adjusting, or I am planning on paying the house off in just 5 years. I'm basically rich and I know I can pay it off. I'm just taking the lower payment up front, so I don't have as high of a payment, which allows me to save more of my income and ultimately pay the house off within the adjustable rate term. Those are the only two reasons that it makes sense to do this. If you're not in that category, then it doesn't make sense and you just got conned into doing something that was probably a bad idea and is going to potentially put you in a vulnerable situation in the future if you end up not being able to make your payments. If you're going to sign up for one of these adjustable rate mortgages, you need to be fully aware of how high or how low your interest rate can go based on the loan terms you're being given, and how frequently the rate can change based on your loan terms, and whether there's even a cap on how high that rate could eventually go. But it just seems like people never learn, man. Like, we have to continually repeat the same mistakes in humanity. Like, if enough time passes, it doesn't matter how big the mistakes were in the past. It seems like people are doomed to just repeat it all over again. Now, I have a couple of real estate stories that were sent in by my viewers that are directly affecting people who watch this channel. One of them is about people who are not U.S. citizens buying homes, and how this person believes that people who are not U.S. citizens should not be able to buy a home. And one of the reasons for that is because when you allow people from other countries to come in and buy our real estate, you're introducing a whole new tier of people on different economic ladders. You know, when you are looking at, say, buying a house in this neighborhood I'm walking through right now, if nobody was allowed to buy homes in this neighborhood that was not a U.S. citizen, I guarantee home values here would be way, way lower. You wouldn't be seeing $7 million homes on this street right here, because the fact that anybody can come here from South America or Europe or China or wherever with multi-millions of dollars and easily pay cash for one of these homes here in Miami Beach, that changes the game. Versus if you're going by people who live here and work here locally, most people are not going to be able to afford those prices, and therefore would be considerably lower. And the reason why this person wanted me to talk about this is because recently in his neighborhood in South Carolina, there were 5 houses that just got seized by the U.S. government due to drug cartel activity. And so far they haven't made any arrests, but they seized the houses. And check this out. These houses are located in an HOA community. So now he's saying, look, how is this going to affect my home value now that the federal government owns these homes? Are they going to do the upkeep with the structure? Are they going to mow the grass? Are they going to water the lawn? Are they going to pick the weeds? All the things that you're supposed to do according to the HOA. And if they don't do it, how is this going to impact my property value? And so he's really upset that people from other countries can come here and buy homes, because this is yet another issue that would never have to happen if that wasn't a possibility. Now, I've heard many different arguments on this in the past from people when I've brought this up before, and there are good arguments on both sides, in favor and also not in favor of non-citizens buying real estate here. But it's one of those things that's probably never going to change. Whether you're in favor of it or not, this is what's happening. And it seems like nobody in our government really cares. It's not on their radar at all. Like, yeah, sure, for example, here in Florida, they're not allowing people from certain countries, especially China, to buy certain types of real estate here anymore, but they still can buy some real estate. So it's not like there's a ban altogether on foreign buyers here in Florida. And it's only in certain places, like here in Florida. Most of the US, they can buy whatever they want. So is one state's policies really going to change anything nationwide? Not really. So I don't know. You guys can let me know what you think about that in the comments below. Let me know if you think non-US citizens should be able to buy our real estate, or if it should be exclusive to US citizens. And one last thing that was brought to my attention is a couple of my Canadian viewers wrote me this disturbing story about how basically land acknowledgements in Canada are causing big problems with real estate over there. Because essentially, in British Columbia, for example, there's a tribe that has recently been given co-title with about 150 owners of real estate, because those homes were allegedly built on unceded land, which means people who might want to buy them cannot get bank loans as they won't have clear title. And also, in Canada, for example, they typically don't have a 30-year mortgage like we have here. People get 5-year loan terms for the most part, and then you need to get a new mortgage after every 5 years. But guess what? People who own those type of houses are not able to get their mortgages renewed because banks will not touch properties with any sort of legal problems attached to it. So property values in these areas have completely collapsed. You can't sell, and no one wants to buy them. And these homeowners are essentially trapped. I have not heard of something like this happening here in the US so far. This is just a Canadian problem. But if you have, let me know in the comments below, because this is really a disturbing thing that we've never heard of before, making it so that you have to basically ask permission to sell your home from the tribe because they are now co-owners of the house. And so this is a risk to the entire Canadian housing market, and I'm not sure how this is going to play out, but my friends in Canada can keep me posted on this, and I wanted to make sure that this got some acknowledgement here on YouTube at least. So if you guys enjoyed this video, make sure you subscribe to the channel, and if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.